Okay, so this is a recording of the Fibonacci and how it works and how to use it. Okay, quick short example. So we go to a daily, it could be any time frame, all right? And what you do is you're trying to ask yourself, where will the market retrace itself? Where will it go back to? It is now coming down, rolling down, but you're not sure how far down it will go. So the last high it had was there. Last body high was somewhere there, not the week high, and the last body high down here was somewhere there. Okay, so you're asking yourself, where will it? Try and make it bigger. Yep, that's much better. So what you do, then you take your tools, you go to drawing tools, okay, and then you do Fibonacci retracement. There's also what we call Fibonacci expansion. The expansion is when it goes beyond the range or below a particular range. But this is just playing within a range. See, we are playing between somewhere high there and somewhere low. As long as you're playing between high and low, you go for Fibonacci retracements because you're saying this market has gone up. I'm asking myself, how far back will it retrace? So you've heard of guys saying we are doing. I normally trade only retracements. It means that if the market is going up, okay, it's going down here and then it's going up. So because maybe it's on an uptrend, I'll say on a retracement when it's trying to retrace where it has come from. So in a perfect world, it should come back to the last low here. But this is not a perfect world. This is the forex market. So you use tools to try and guide you where it will go. So I'll try and change the color of this tool, but let me see first. So you go to the last low and you draw a straight line. You see the tool expanding to the last body high there. All right, I'll have to change the color on this so that you can be able to see something. So I come here, tools, not in, then the color we can use yellow or we can use light blue. Okay, there we go. So this now will explain to us. So I went from the last body low to the high body high. Now if we look at the numbers, I think I've zoomed in far enough. Can you see the numbers? The blue numbers.
Yes, I can see them.
Okay, good, good, good. That was my concern, if they are visible. So what Fibonacci tool is telling you that the market, okay, the percentage, the probability of this market to come back down to 100%, okay, they have lines, and these lines have significance. In other words, it will stop. As you can see, the market has stopped around 23%. That's a significant number, okay? In this hierarchy of things here, uh, the very important numbers are 23%, 61.8%. Those are very important numbers. So even if we didn't know about this, we could have set our take profit first at 23%, because now we have measured, we'd have said, I want, when the market reaches here, I want out of that trade. But if the market breaks there, if it breaks there, like now it has broken, then it's simple. Our next stop is likely to be 68%, 61.8%. Okay. Now these ones never fail. You ask me why, I'll tell you I don't know why. But these numbers, 23, okay, from 0, 23 and 68, those are very significant. So this is a daily chart. And I can tell you for free, that if this thing doesn't break up, so watch with me. Today is Saturday, so Sunday, we go to Sunday and then we go to Monday. For the next 5 days of the week, if the market breaks 61%, then it will rally down all the way to the bottom. Okay, that's just the market, that's the way it is, which means for somebody who is a long-term trader, they will set their pending orders there and say, if it breaks, then I'm gonna go down with it all the way there because it will come and stop. It's almost like a pin stop. It will stop right on the dot at 100%. All right. If it decides it's gonna go back up, so if you see it going down like that and then come back, so it's coming back, it can either now go down or take another journey up, come back and retest the 23. So it might stick there for a while and then either continue or come down again. So what am I saying? What I'm saying is the value of the Fibonacci tool is to help you figure out where the market is likely to stop so that you can plan on it. Okay, so if you didn't know about those, what happened here, what you could have done is you could have, okay, perfect, there. So assuming we were trading and we see, yes, after the first time the market comes down after almost a week of going up, 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 then the big question to all the traders was, okay, now where will this market go? How far down will it go? Well, you know, if you're going to downtown, you buy bread at 50. So of course, you put your take profit at 50%. But you know, if you're going to Kibera or Eastlands, the bread will be at 20. All right. So then you take your take profit at 20. So that's the kind of discussion that should be in your head. So the kind of discussion should be ahead is in terms of retracement, when a market goes up like that, it might retrace back to 100%, but even if it doesn't, it is more likely to take a pause at certain significant points. And the first point is at 23%. And look, would you know that this one actually came and spot on stopped at 23? And then you'll say, okay, I'll now enter my trade because if it breaks 23, the next stop is likely to be at 61. Okay, here we don't have the hindsight of the trades, I mean, of what will happen. So here we're just trading based on Fibonacci and what we know about the significance of 23 and 61%. All right. So as time went by, let us see what happened. So on day 2, 23 has been, you've banked 22, you've banked at 23, but in your mind you're still confident that the market is coming down to 61.8 because it's broken there. So you are still waiting. So day 3, oh, it went up, but you're still confident the market is coming down. Okay, day 4, it's still trying to go up. Day 5, it's going down. Day 6, going down. Day 7, there, 61.8, right there. You can see that wick. Yeah. So remember, those lines are zones. They are not one straight line. They are a zone, a level. So right there, in terms of planning, you would have planned to take profits at 23% and at 61.8, and the market would just spot on, hit on it. And if you can watch the market beyond tomorrow, beyond Sunday, it's likely to go back. You see, likely to go back or come back and break that. If it breaks, it will go all the way down. If it breaks, it will go all the way down to 100%. If it doesn't, it might go back to try and retest 23. Okay, and even then, you can still trade those. I call them significant areas. So if you look at 50, 50 is also a zone. You know, this is not as popular as the other, but 38 is a zone, a very, very popular zone. So if I had to draw like a rectangle, okay. So even 50 is a zone, as you can see here. Okay, inside there, it is a zone that has been respected a few times. Okay, this is what I mean. 50 is a zone. This is 38.5 there. But more importantly, this is a more important zone, the 23 area and 61.8. So if you are trading this, I would take profit on each of these zones. There, 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 there. And check, just check, as the market came down and you are timing this zone, will you have taken profit? Yes. And then assuming you are shooting for the next zone here, will you have taken profit? Yes. Okay. Then if you're assuming you want to go to the next zone, will you have taken profit? Yes. And the last one, 61.8, will you have taken profit? Yes. So in all the zones, the market respected and took profit. So if you're setting up your trades, you set up your trades, and this is just a random one. We picked a very, very random one. Let's see if we can pick another random one just to confirm the theory. Again, this is backtesting. So let me clean this up. And we can say maybe that was just a coincidence. Well, let's see if the theory holds. All right, we pick another one. Okay, that one we had the hindsight, unfortunately. So let me take this one. So I'm going to actually mark the support resistance on this. Oops. All right. So this is support. Okay, that's resistance over there, and this is support. So between here and here, I want to see what will happen. So if the market is going to respect what it has been doing right there. All right. So again, same thing. You come here and you get your tool, Fibonacci retracements. So this is your last low. This is your high. You mark the last body low to the last body high, which is about there. Okay. Now, if you look again, let's see if I can zoom this down. Oops. Okay. And I'm going to see if I can change the color again. So when you're at home, try and back test it. In other words, try and see whether it's actually making sense. Now we are doing it in a class, but does it always hold? Does it always hold? Well, guess what? This is exactly what it has done. So we have put the tool, the Fibonacci tool, and if you look, what do we see? It's reached up there. Now remember, our first significant point is 23. We want to look at 23. We want to look at 68, because those are the points we want, whether it's going down or not. So if it's not going down and it's going up, it will reach one of these significant points and then it will turn, it will go away, which is fine. So let's see what happened. Let's go step by step. Okay, right here, it came down, but where did it reach? If you look properly, it reached 38.2. Okay, I'm not seeing very well, but almost 38.2 there. So the wick reached that point. These are zones, by the way, they're not just points. All right. So it reached that 38.2. If it's gonna go up or down, if it's gonna go up, it might reach 23 or go down like that. So if I was trading, I would actually now do a buy up to 23. And yes, it did reach 23. Because even if you look, the last time, that's where it reached. So those are significant areas. If you look everywhere I've mentioned are significant. Look at 61, that's a major point. Okay, 50 is not so major. 38 is a major point. The zone, actually, if somebody was to draw a line even on this side, oops, sorry, my line is not very, there's a point there that I'm trying to show, that this Fibonacci lines, they are strange. They are very significant. This is 23. 23, if you look even this way, okay, and at zero, again, as a zone, if you look, so even just by putting a Fibonacci, you can actually trade them. You can use them as a support and resistance. So you go this way, you take your trades up to there. You take profit, take profit, take profit, take profit, take profit. Okay, again, the scalper. You break down, you know where it will go. It will reach here. Okay, as a scalper, if it is there, take profit. Wants to go down, take profit. Wants to go up, take profit. You know, it's all there. All right, let me see what happens. So the next candle is starting to go up. Where will it go? Well, it might go back to 0 or come back to 23. Okay, so it's playing. See, it came back to 23. So if you had taken like a scalping, whatever, you'd have made some money here, because once you knew it was coming down and then you enter here, they brought you down. Now it's rolling down. It's past the 38, like we said, and it's at 50%. Spot on, and it just stops right on top of it, and then goes down to 61.8. Now 61.8, like I said, sometimes it doesn't stop on a line, but that's the zone. So already it has touched the zone. So if you had put your profit targets at 23, you'd have hit your profit. If you had put them at, sorry, 38, you'd have got your profit. At 68, you'll have 61.8, you'll have hit your profit. So on its way down, the significant stops, even for this one, were clearly two places. The first point was this one, which is 38.5, and the next significant point is this one, which is 61.8. And that's what I was telling you, that they have a significance. So it's going to go up again and try and revisit up there, then come back down. And again, if you look at where it has gone, it has touched those points again. Now, as we had said, when it touches the 100%, it has completed a complete cycle. So now it can only go back up to try and touch this point again, or it can break downwards. So where would I set my take profits? Guess is right. Now you do the same thing. You do a Fibonacci, but this time this is 100%. So you want to start going up. All right. So I would go here remove this one now. But now I put another one coming from the top body to the bottom body. That's the bottom body right there. Okay. All right. So same thing. The idea is the same. Let me change the color for visibility. Uh, so you'll find that again the same thing will apply in terms of profit. Where do you want to take profit? So if you're going retracing, going back, where is the market likely to stop? Well, likely the highest probabilities are normally 23, 38, and 61.8. But nevertheless, if I was you, I would go back to each of those levels and take profit. So let's see what it did. There. This one went straight away, didn't even waste time. It took profit at all those levels all the way to 61.8. Why not 70? Why not 56? Why not 45? Because of what I told you. Okay, those are what we call significant numbers in Fibonacci. So in Forex, you take advantage of that knowledge and you make sure you always have your take profits at those levels 23, okay, 38.2, 50, and the last one 61.8. If you take even on this trade, if you had, if I was the one trading it, I would have taken profits there, profits there, profits there, profits there. Why? Courtesy of this Fibonacci tool. So the knowledge of Fibonacci tool is very, very critical, very, very important. Okay. The other tool, which is Fibonacci extension, works on the same principle. If you extend beyond 100, there are some natural numbers, okay, and they're all written there that the market will stop by. But to me, I always say, if it's going to extend, then why don't I measure from down here to wherever it's going to go? Again, it will stop on certain natural numbers. That's why you find when people are doing scalping, at some point, almost something things become almost natural for them. They can ball eye the market and say, it's going to return back and it will reach somewhere there. So I'm gonna keep buying, 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 buying until I reach there. When I get there, I'll stop. And sure enough, you see the market will just respect that. So the market has a way of respecting those. So if you can mentally have those numbers in your head, okay, those numbers where the numbers are 23, 38, and 61.8. In fact, for me, I just normally know 61.8 and about 38%. So, but mostly 61.8. So if I know if the market is coming down, I check for 61%. If it goes beyond 61%, then I know it will go up to 100. If it doesn't reach 61%, I know it will turn back, it will go up. So I don't have to memorize. I don't have to know all the details. No, all I know that if it gets here beyond 61%, it will come back to 100. Before 61, chances are it will turn back and will go back up. All right. Sorry again. Now the work remains on you. If you still want to backtest the Fibonacci, it's up to you. Because clearly, as you can see, uh, they go by those numbers. Even after we wrote it there, look at what has happened. It has still, what do you call it, obeyed what we were saying. Okay, we were testing it somewhere around here, but if you look, it is still, that area is still obeyed, the zone. Okay, 23 is still being obeyed. This one, 38, all right, 50, 61. 61 is a significant one. It's a major one. There. Any question? I guess the video will become very long, but that's how you use Fibonacci. Are we good?
Thanks a lot. That will be my favorite video.
Okay, Sasawa. So I think we shall save that and sambaza the word, and you can review the video as many times as you want. And if you have any questions, you can always ask. Okay. So I'm always open to ask any questions. Sawa.